Welcome back, Alpha Hunters. We did see some pretty good bearishness yesterday, though. Nice little higher open. Basically just faded pretty much the whole day. Pretty good little bearish day there. Kind of interesting. But as far as today, kind of a flat open. Not really too much going on there on the open. And a little bit of bearishness. But between yesterday's afternoon, last 30 minutes, and today, looks like we're trying to form a little bit of a kind of a base here. We do have a little bit of the breakdown of yesterday's low, but nothing really crazy. I'd say if we start rolling a little bit lower, maybe we continue lower. As far as the Qs, yeah, you can see just how much selling kind of came in yesterday. And we did go a little bit lower than yesterday's low as well today. Did bounce. Doesn't look too much indifferent from the SPY. Both of those are currently lower by about 0.1%. IWM, though, is currently down about 1%. Oof, that's brutal. Had a little bit of a significant drop there 30 minutes after the market opened yesterday. Okay, so had a little bit of a gap up, traded sideways, and then, yeah, dropped off pretty good sideways move. Rolled over. A little bit of a gap down today. Nice little basing action. So far, first hour and a half today doesn't look too bad, but still down pretty good amount. DIA gapped up, faded pretty much the whole day, and basically a flat open, but we did move lower, broke yesterday's lows, a little bit of double bottom, kind of a little base action, kind of looks like. So if we start to move lower across some of these ETFs, we might just continue lower, but the real reason why I'm saying that is because, well, we have some pretty good basing, at least across some of these from yesterday afternoon towards the end of the day and this morning so far. So I would be willing to be a little bit more bullish here, but I wouldn't be afraid of, if we continue to roll down maybe midday or later in the afternoon, if we roll down, break the day's lows, to possibly even flip positions, maybe even look to just be bearish a little bit, find some good technical levels maybe to go down to or something like that. As far as the RSP, yeah, nice little gap up yesterday, faded, trying to bounce and base out this morning so far. RSP currently down about 0.3%. So it's getting kind of interesting here with the RSP because we had that bounce there, kind of coming out of the middle part of December's little drop off going into the back half of December. We had this little bounce into that 100 moving average. And that was it. That was the bounce, and that is really, really kind of scary because you have this nice little drop off that we had for pretty much the first 2/3 of December, and we got what looks like a double top here going sideways. So if we break this down, now the cool thing is you're gonna have the 200 moving average just below that, but I don't like big breakdowns and then sideways consolidations because typically that just says we're gonna go lower. But yeah, that's a tough one. It is a tough one. I would definitely say if we start to get back below that 174 line, which we haven't closed below that. We almost closed below that back over here on December 19th, and we did open below that. Then the following trading day, the 20th. But if we do get below that, maybe even close below that, you're probably just going to look for at least a quick move to the 200 moving average. You can maybe play a day trade, looking like if we get down to that level, because that's about where the low is today as well. So if we get back down there and start to move lower, I wouldn't be afraid to probably hop on bearish. Probably just looking for a move to that 200 moving average if that does wind up being the case. And here's the same thing kind of with the DIA, but it has a little bit more of a downward trending double high here. So yeah, we're getting into a spot here, at least with the DIA, where it's going to have a moment of popping the top. It's going to go one way or the other, kind of. Okay. It did try to bounce off that 100 moving average back over here on the 20th of December. Chopped around that 100 moving average here recently, over the past week and a half of trading. But the more you get through a level, the more likelihood it is to go to have that breakdown of significant matter. And IWM was a little bit different, right? Because we had this higher push compared to that high that we did put in back on the 26th. So we had a little bit of a higher push, but we've dropped off pretty good here over the past couple of trading days on the IWM. Obviously down pretty good amount today. We have this previous support area back over here around the 218 level, which is basically where we bounced 2 previous times over the past couple of weeks. So that's, I mean, obviously there's some kind of people are being supportive in that area. So if we get below that, you're probably looking for a quick move down to that 200 moving average. Qs. The Qs doesn't look too bad. Also, obviously, it didn't have that huge sell-off there from the beginning of December when the previous ETFs kind of had some pretty good bearishness. But we did have a pretty good drop there mid-December, and we've kind of gone sideways a little bit. We got a little bit more of an air pocket in between that 50 and that 100, and compared to what we did before back in like October. So that run that we had at the beginning of December has created this air pocket. So if we get through there, you might see a pretty good drop as well. So kind of the theme across a lot of these ETFs is they are on the verge of some of these bigger air pockets in between these moving averages. We got lower highs here coming in on the SPY, and we got a little bit of a lower low here as well across these lows. So a little bit of a lower low, a little bit of a lower high. It could be a flag pattern. If you looked at this on a weekly, it could be a flag pattern. I'm sure you can make that case. The other thing it might be is an ABCDE correction. Let me bring that up. ABCD. There it is. So you got A, B, C, D. So if we come back down and make an E, you know, it could be something like that. Now, typically when you do these, I do like the ABCD, the ABC correction, and then you go higher, because typically that's the ones you get. Every now and then you get the ABCDE, but whenever you get the ABCDE, you very much, they are minor breakdowns of the previous spot. So you get the A is the first pullback, right? And then the C breakdown of the A is, it's very minor, right? So we got a very minor breakdown. So would I be shocked if we actually came down and made this E a little bit lower than the C? No, I really wouldn't actually, because we are having lower highs, lower lows, but we're not having significant moves lower. So it's very possible that we do maybe come down, break that low just barely. Also would be if we do that sometime here in the next few days, maybe Monday, it'd be about where that 100 moving average is, and then maybe we start to bounce from there. I don't know, man. I don't know. That's why you gotta have stop losses. That's why you gotta have stop losses. Anyways, that's just a kind of quick look at the markets. We are seeing some pretty good movement out there over the past couple days. As far as the VIX, seeing some pretty good higher moves so far. This is we put in a new high for this year already today on the VIX. We did have a pretty good bump there yesterday. We do have higher lows coming in right now. Don't really have higher highs just because we didn't take out that high from mid-December. So keep an eye on that. DXY, man, continuing just to motor, man. Just motoring higher. Look at that thing. Good grief. That thing is an absolute monster. Pretty good pullback there to start the year. Bounced right off the moving averages, uptrending moving averages there off the 20 EMA. Looking pretty good. Gold looking pretty good now. Wow, you got gold and dollar looking pretty good today. Okay. Gold was actually positive yesterday, even though it did fade a little bit. Or the GLD faded from its open yesterday. So looking somewhat decent there. 10-year yields continuing to climb so far in the new year. Okay. Although it's got a pretty nasty upper wick. Yep. 10 and 2 inversion. I'm going to stop paying attention to this because it is pretty evident we are now moving off that zero line. So I'm going to trash this and get this off the list. 10-2 inversion. We are done with that. All right. Let me know what. Let me go back and I'm just going to eyeball real quick just take a look at that 10 and 1. There you go. 10 and 1 also climbing off that zero line. So yeah, it seems like the yield curves are definitely done inverting. As far as the HYG, high yield corporate bonds, nice little bounce to kind of start the year, which is kind of interesting. People feeling like high yields. I mean, yields for the most part were have continued higher. So the risky side of bonds is where people look like they've been more bullish so far this year, the first few days, but it's come back down. Basically flat today. LQD, yeah, see, here's the LQD, a little bit more tied to longer term bonds. Bond yields, you can see they dropped off So LQD up a little bit today, but definitely dropping off in the new year. TLT, same kind of deal, dropping off in the new year. Where's some of the, let me take a look. Yeah, so we're getting back down to some of the lows that we had at the end of 2023. So we got a little bit to go to get down to those lows, about 2.5 points there on the TLT. As far as the LQD, has not gotten down to the lows that we put in about 9 months ago, back in April, but we are getting into that area. So you might get like one day to like really break it down, kind of like how we did back about a year ago. We did, what day was that? Maybe like April 15th last year. We had a pretty good breakdown day. You can see we're trying to kind of hold it, and then just like one day, it just all of a sudden comes down to this lower level. So basically just 2 days, I guess. April 15th and whatever, 16th after that. As far as sector rotation for the day, healthcare leading the day, materials, real estate, discretionary is doing pretty good. Energies and financials kind of in line with the market there. Industrials kind of in line with the market as well. Tech, staples a little bit underperforming. Utilities, communications underperforming the most. As far as intraday price action, you got energies doing the best intraday. You got materials, healthcare doing pretty good. Real estate doing a decent amount. Industrials, discretionaries, financials all up. Staples are in line with the market there. Tech, communications, utility underperforming. Here's a quick look at how things have gone for the week. You can see tech started off really strong there on Monday, but it's come back down now, a little bit underperforming there on the week for tech. Things are doing the best on tech, or best this week so far. Healthcare, materials, energies, industrials, slight outperformance so far for the week, mostly because of today. Financials kind of in line with the market. Tech a little bit underperforming. Communications, discretionary staples, real estate, utilities kind of at the lower end of the week. As far as how things are moving for the year so far, it's always interesting to see how things move in the beginning part of the year. Where are people really, where were they waiting to put their money, into investments and rotation? Really kind of good to see that, shortly after the new year. As you can see, some of that rotation trying to line up. There we go. Right there. Energy is doing pretty good. Energies have been doing pretty good pretty much just throughout every day so far of the new year. All right. Not discretionary, says healthcare also looking pretty good. Staples a little, not staples, good grief. Tech a little bit outperformance there. In line with the market is industrials, communications as well. Underperformers slightly is financials, materials and utilities. Discretionaries, real estate and staples are bigger underperformers for the year so far. Year to date, 5 days.